I'll be damned. Look at that. The stock market is actually bouncing into the close today. Keep in mind, I'm filming this video before the last couple of minutes of trading in the markets. Things can get a little bit crazy. But as of right now, the markets are looking weirdly strong compared to what we have seen over the last couple of weeks and last couple of months. That is because we had fundamental positive developments today here in the markets. You also had very positive bank earnings overall, at least from the banks that have reported so far, and we have hit a major technical indicator on the S&P 500, which is the 200-week moving average. And we have since bounced from that. Today was really the telltale, the kicker, if we're going to continue to plummet under that level or if we're going to find support at that level. Looks like we found support. This is sparking Morgan Stanley and JP Morgan to issue a short-term short squeeze kind of indicator, right? They're saying the stock market can go up 10 to 15% over the next couple of days and next couple of weeks. We're also going to talk about the major earnings that we have for this week, how that could disrupt this market rally or potentially add a massive heap of gasoline to this parabolic rally. Loaded up in the rockets, baby. We are off to the moon. It all depends on the earnings that we are going to see. Historically, midterms coming in about 1 month, those tend to be very bullish, as well as AMC and some of our other favorite stocks are so cheap that you almost can't ignore them. All of this is really, I think, combusting into something that could be pretty parabolic. And I also want to talk to you guys, besides everything else I just mentioned we're going to talk about in this video, I do want to talk about one specific trade that I'm very excited about, guys. So let's get straight into this video. Hit that like button, subscribe to the channel, do what you guys want to do in that regard. Thank you guys for watching. Let's get straight into it. So S&P 500 up about 2.66% currently. The NASDAQ up over 3%. And why this is a positive thing, at least as of right now, we're not selling off into the close. We're really holding this level above 366 on the S&P for a majority of the day. And why this is a bullish thing is because when you see people flood out at the end of the day, that is not only trading algorithms, but that is also people that are in their short-term positions that are trying to get out, to take profits, to mitigate risk, so on and so forth. And you're not seeing that as of right now. Obviously, things could change. We still got like 20 minutes left of trading, so don't quote me on it. Things could change, but as you can see right now, we're not getting that sell-off that typically starts around 3 p.m. on some of these strong days that can turn into not so strong days, right? If you've been an investor in 2022, then you know what I talk about. That end of the day sell-off can be pretty bloody sometimes. Doesn't look like it is happening. And what we actually got today, just a brief rundown because I talked about it a little bit in earlier's video, is the UK that's backpedaling on their plans to essentially cut taxes for the wealthiest people. That's why basically like the Janet Yellen of the Treasury Secretary of the United States, but for the UK, he basically resigned after like a month because they announced his plan to cut taxes. He went partying with hedge funds and the markets hated it. That's why investors sold their bonds. The bond yields started to skyrocket. Pension funds were going bankrupt in the UK, and the markets were saying, you cannot do this. You are going to cause so much inflation, and you have no way to pay for these tax cuts. And now they're coming out and saying, yeah, we're still going to raise taxes. We're going to follow through with the plan that the markets expected. Not too much is actually going to change. And now you have the bond yields on the gilts falling, and you also have the pound strengthening, which is what you needed to see for some degree of market stability. At the same time, this one's kind of interesting to me because the dollar is down 1% today. The only reason why the dollar really goes down 1% is if the markets are expecting less tightening, right? And I think that's kind of the case, or I should say if the markets are expecting less tightening or a good economy, right? If the economy is great, like you've seen at the lower levels of UUP, this does track the US dollar strength. At these lower levels, early 2021, economy was booming, GDP was great, everything was fine. The dollar hit a low. Now that things are not so fine, the Fed's raising rates, you got high inflation. People want to own the dollar because the Fed's trying to take less dollars out of the economy, right? So you're seeing this 1% down move on the dollar, which is very much granted. And just in case you didn't know, and so everyone is very clear, when this chart goes up, it means the dollar is strengthening. That is not good. That's not good for Apple, Microsoft, or any other American company doing business overseas. It makes your foreign currencies conversion back to US dollars worth a lot less, so that has to hurt the fundamental valuation of those companies. Long story short, we could talk about this all day, but it's down 1% today. The dollar is down 1%. That is very, very bullish, and I think that is helping to give us this degree of stability in the markets. Not only are we having a very good day, up over 2.5%, you're not seeing a lot of those back and forth swings. This was the worst moment that you've seen throughout the day, and it was followed by very aggressive bounces and to hit a higher high and then to hit a lower low pretty much throughout the whole entire day. So we'll see what happens throughout the last 20 minutes, but I doubt this information is going to change by the time you guys see this. So today, this chart showing very, very strong relative strength. It looks like a stock that had positive earnings that just went up and held that range all day. Hopefully this is making a little bit of sense to you guys. Now, what is this key level on the S&P 500 that I was talking about? It's the 200-day moving average. The way to pull this up, if you're on Webull or any other charting website or whatever you like to use, just go to the weekly candlestick chart and put up moving averages. If they don't automatically fill it, you want to do the 50, 100, and 200-day moving average. And the 200-day moving average is really the important one. And this is the one JP Morgan as well as Morgan Stanley are talking about, because this has really only happened like 4 times in history, right? You guys heard that not too long ago. You came down, you got very close to this moving average back here in 2016. In 2018, you got very close. In 2020, you broke under it for 2 days, and then you bounced back up very aggressively. And as of yesterday, or Friday, I should say, you went under this for a brief moment. You did end up closing higher than this, which is a positive thing. And then today, you're getting a strong bounce above this, and you're really seeing a gap up to the upside. So hopefully, you guys can see how important this 200-day moving average is. And that, like I said, is a big reason why Morgan Stanley and JP Morgan are calling for a very aggressive short-term bounce. As you can see right here, Morgan Stanley sees a bear market rally that can lead to an 11% gain. If we take a look at exactly what is said, it says Morgan Stanley's Wilson says U.S. stocks can rally in the short term. And that's what he's talking about, is the 200-day moving average. And he actually did use 2011 as an example as well, because we did actually touch that moving average also. Now, it says Morgan Stanley's longtime equities bear says U.S. stocks are ripe for a short-term rally in the absence of an earnings capitulation or an official recession. A 25% slump in the S&P 500 this year has left it testing a, quote, serious floor of support at its 200-week moving average, which could lead to a technical recovery, strategist Michael J. Wilson wrote in a note on Monday. But forget Morgan Stanley, forget what anyone has to say. They're wrong more than they're right, just like most people. But what I personally find interesting about this is the way that the markets did bounce today off of the 200-day moving average, and on Friday after we broke under that 200-week moving average. The most important thing, and I think the biggest thing that will really go unsaid if we go through a bear market rally, is 2 things. The very, very low net long exposure hedge funds have. So in other words, hedge funds want the stock market to go down by and large, right? They don't have a lot of exposure to any upside move. So if that upside move comes and you don't have exposure to it, that means you're going to lose on a majority of your portfolio. And then you're going to have to go out, either cover on those short positions or go out and buy stocks. Either way it goes, that causes a positive momentum in the stock market. But the second thing that really feeds into that is the trading algorithms, because let's face it, it's a proven fact. 80% or more of the volume that you will see on the indexes or any other stock is done with trading algorithms, really to provide liquidity, but we know what the trading algorithms are actually doing. So when you see a clear bounce and a clear technical indicator, It is the trading algorithms that are doing that. You can bet against the algos all you want, but when they control 80% of the volume on any given day in the stock market, I like to pay attention to the technical levels where trading algorithms also pay attention to, because trading algorithms, they are the ones that are really controlling the shots as of right now. They're the ones that, you get a 5% down move or 5% up move. It's the trading algorithms, right? We all know this. And that's where we're so early in this potential bear market bounce that there's a very big opportunity to make a lot of money. And one could say a short squeeze for the broad markets is on the way. Let's be honest. Let's call it how it is. That's a short squeeze for the broad markets when hedge funds have damn near zero exposure to the upside and a bunch of short positions. At the same time, you get trading algos that hit a key technical level and start to bounce from that. They start to provide liquidity in a very big way. Well, I would call that a short squeeze, because that's exactly what it is. So take it for what it is. Morgan Stanley, JP Morgan, all these guys can say all these things, but really think about the trading algorithms here and that key technical level we hit at the 200-week moving average on the S&P 500. I do personally think that will give us a market-wide short squeeze, and I do think some of the best performing stocks will be stocks that say, hey, Vanguard, BlackRock, State Street, Goldman Sachs, or Bank of America is buying millions of shares in. And one stock that really sticks out is AMC. Vanguard now owns 95.18 million AMC shares, which is almost the same as the total amount of shares that are sold short. 18.42% of AMC shares are owned by Vanguard. BlackRock owning 51.77 million shares, or 10% of the outstanding shares. State Street owning 4%, Goldman Sachs owning 1.16%, and Bank of America owning 1.05% of AMC. I think those kind of stocks, such as AMC, could be the biggest winners in a potential rally event. Now, as far as earnings that we have for this week, you guys probably already know you have Goldman Sachs, Johnson & Johnson, Lockheed Martin in the morning. Those are going to be the most important ones, I believe, for tomorrow morning. And then Tuesday after hours, that's where things really kick off. If Netflix has solid earnings in after hours on Tuesday, Tesla has good earnings on Wednesday, Snapchat has good earnings on Thursday, boy, are we going to be off to the races, because stocks can only fall so much until it's like, hey, dude, they're still making numbers on their earnings. Like, we should not be short this company, because after all, what's the reason why you short a stock? It's not because necessarily you don't like that stock or you hate that stock. It's because you think it's overvalued. So if earnings show that you are indeed wrong, and some of these stocks control, a couple percentage points of any given index, right? S&P, NASDAQ, Netflix, and Tesla are big weightings in both of those. Well, that's going to force you to get out of some of those short positions. That's going to force a short squeeze to happen. And like Morgan Stanley said, we're not in a technical defined recession as of right now. At least the, IMF, the Better Business Bureau, they have not said we are in a recession. So markets are not going to freak out about that as of right now. If earnings are good, things will get very, very parabolic. And also, I should put this in here, we have a lack of economic data. We really don't have anything that comes out besides on Thursday. You have initial jobless claims and existing home sales, which comes out in between 8:30 and 10 a.m. But other than that, you have nothing. So earnings will be the main key. If earnings are good, stocks will fly, guys. Keep that in mind. Now, AMC stock at the time of recording this video, let's go ahead and pull it up. AMC stock is, I don't have it pulled up at all. I was actually looking at a bunch of different trades today. But AMC stock is up about 5.5%. AMC is off of the lows for 2022. It looks a lot like the broad markets, right? We kind of had the same thing happen, but AMC has been a relative outperformer even on big green days in the markets like today. AMC stock is outperforming by a very, big degree, 5.5%. Some stocks up more, some stocks up less. But I think when you really start to get that risk on sentiment in the markets and you get earnings which are good, really that's all it's going to come down to, in my personal opinion. I think AMC stock will fly, and I think you will get some shorts covering, because at this value at $6 a share, you have a lot more potential upside from here if you do get a good earnings beat as well out of AMC. Now, the estimated short interest of free float sitting at 19.02%. The free float out on loan sitting at 35.57%. Shares out on loan 183.3 million. Days to cover 4.57. Cost to borrow 19.31% and 100% share utilization. The cost to borrow max is sitting at 29.22% and cost to borrow average is sitting at 24.43%. These are relatively the same numbers that we have seen over the last couple of days, so not too much action as far as that is concerned. Now, as far as the option activity, you are net positive on the day. You have seen 24 orders in AMC totaling $1.61 million with a positive order value of 58%. So that is, again, a very positive thing to see an over 50% positive order value, meaning there's more bullish money, call it that, bullish dollars heading into AMC rather than bearish dollars, right? Rather than people buying puts, selling calls. There's more people buying calls and selling puts today. So guys, that's pretty much going to be all for this video. We covered a lot of bases here in this video. And here is also another article I will definitely link down below in the description, just talking about how the markets, when they fall this much, it's not going to take a lot to really rally them. Kind of the same thing that we covered with JP Morgan, but a little bit more history and a little bit less actually on the technical. So I will link both these articles down below in the description of this video. Make sure you guys give them a read if you do want to take some positioning. Now, actually, I did talk about the trade that I am very excited about. So if you guys did stay to the end, well, here it is. It's TQQQ. Now, I have 20, 30 options in this so far. I'll go ahead and show you guys exactly what options I do have, just because I think this one could be a really big runner. And essentially, if you don't know what it is, it's like the NASDAQ on steroids. So if the NASDAQ is up 3% like it is today, this thing is up 10%. And really, why do I like it is because you can get, till November 18th. These are the options that I have. You can go out to, the $25 calls, in which those are the ones I have. And these things can move 60, 70, 80, 90, 100% in any given day. And they're also pretty cheap. This break even is only like 20% away, give or take, to about $25 on this. And just, not too long ago, TQQQ on the last bounce that we've seen was upwards of $30, right? September 13th, TQQQ was $30 per share. If you got 20 of those options and, you go back to $300 a share, well, you're going to make 20 times $500. So which is $10,000. That's a pretty good risk to reward ratio, all things considered, if we do get a continued rally because of these technical indicators that we have talked about here in this video. I think it's a really good risk to reward, and you could play that all different ways, but you still get until November 18th. That's why I personally like this trade as of right now, guys. So that is going to be all for this video. Hit the like button, subscribe to the channel if you guys have not already. If you guys want to come trade with me live in real time, see exactly what I'm trading, how much I'm trading, what the time frame is, what the reasoning is. Simply put, it's not financial advice. Could be wrong, could lose all your money. Know that if you do sign up, but it's simply a tool you can use to get different ideas that hopefully will grow your knowledge and help you create, or make, I should say, better decisions on your own, to really get ahead in this market, right? The last thing you want to do is sit on your hands and just watch your portfolio die when there is relatively safe things you can do given where the markets are and given how much the markets have fallen. This, I think, is a relatively safe bet. Granted, if earnings are decent, which I think earnings will be somewhat decent, especially for some of the larger companies, because expectations, they have fallen through the floor for company earnings. So guys, that's it. You guys enjoy the rest of your day. I will see you in the next one.